morning, good afternoon, and good evening to all. Myself, Vaibhav. I welcome all of you to today's session of Visual JForex, in which we'll be continuing our algorithm development work using the indicator Fibonacci pivot series. This is the third and the final part in this series involving this indicator, and today the focus is going to be on completing the sell side of this setup. In last two sessions, we had carried out these developments which included the instrument subscription where the Euro USD is being used as the instrument of choice. After that, I had added these different blocks. First one is of the indicator Fibonacci pivot, and we have defined these input parameters as per our requirement, and using these output values, we will be defining the conditions which are going to help us figure out a profitable combination. To look at the price volatility, these get historical candle blocks are also being used with varying look back periods. This one is 1, here 2, 4 and 24 respectively. And afterwards, to pinpoint the exact entry point, this 10-second candle period is also being utilized. And to define the difference between the hourly candle close values, we have taken into consideration this calculation expression block, and using that difference, this stop loss and the take profit level has also been defined. And on the lower side, we have these conditions in place for execution of the buy trade. Now we have to complete the sell side of the equation, and the formation is going to be symmetrical. So you can guess that this will be the mirror image kind of formation. Here what we had done for the buy side, we will have to kind of go for the inversion of those conditions, and for the buy side we were relying on the support level. The S1 was in focus. Now we shift our gaze to the resistance, and we will be utilizing the R1 formation of this pivot series for figuring out the optimum levels to go for the entry for a sell trade. The logic is kind of simple. We want the underlying instrument to have rallied at least to some extent, and that's why we are taking into consideration the selling opportunity only after the underlying instrument has reached this R1 level. So that ensures that there has been correction, if you want to refer to this rally that way, on the higher side. And now this might be the opportune time to go get involved for the new trade. And it might be the case that, as has happened this time around, that after this rally, after due consolidation, the underlying instrument again continues to trade on the higher side. That is also a possibility. But to make sure that we don't really lose too much money even in this kind of scenario, we will try to make sure our formation is sound enough. So for that, we will take into consideration the consolidation of at least 24 hours along with this rise first. So here the requirement is going to be that the last hourly candle close needs to be lower than this R1 level, and the penultimate hourly candle, that is the hourly candle just prior to the last hourly candle close, should have closed higher compared to the R1. And then we go back 24 hours back in time, and there also the requirement is going to be that the hourly candle close 24 hours back should have closed on the higher side. It should have been higher compared to the R1. So the requirement will ensure that there has been consolidation after rallying on the higher side. Suppose if we consider this hourly candle close of 9 GMT of 3rd February. Then we go back 24 hours, so that is going to be 9 GMT of 2nd February. And if we consider the 9 GMT closing value, I think it is kind of close. We are not getting the precise levels here, and it might have closed, as per my guess, it has closed on the lower side. So here I think the condition might not have been fulfilled. So this also ensures, if you look at it that way, that unless there has been 24 hours consolidation, the trade execution will not happen. So we might even be saved some false trades which might otherwise have been generated if we were not really looking at the consolidation level. So that requirement also helps to avoid that kind of trading scenario. And I think if we have to figure out some other opportunity which might have come our way if we were to rely on the formation, I think somewhere here we can give it a try. So let me check 13 GMT here, 13 GMT, no it is 14 GMT. So and here also no trade would have been executed as we don't really have this necessity, this requirement of 24 hours being fulfilled. Probably this time around it might have happened. So our algorithm would have executed the sell trade if it were working that time around, and most probably it would have closed the trade on the profitable side as it went on to decline almost 50 pips from those levels. Okay, so our formation looks good enough. Of course we have to test it for longer time duration for at least a couple of years, and you will have to take the help of the JForex platform. You will have to run the test once the formation is complete. Now that the logic has been explained to you, we head back to the Visual JForex board which has been developed by the Dukascopy Bank SA. Here I will start adding the if blocks to define the conditions, and we will also have to carry out the calculation for figuring out the difference between the hourly candle close, the last hourly candle, and the hourly candle which had closed 4 hours back. We will have to take the closing level of the last hourly candle and the candle high of the candle 20. We will take that difference, and the difference will be our stop loss, and twice of it will be our stop loss. We will also have to convert it in the integer data type to get those pip levels in the integer format. Okay, now we get started, and first thing first we will have to get three mathematical components, calculation expression blocks, and join this three, and we now have to take the candle 18 candle close and candle 20 candle high. I will first take candle 20 candle high, and after that this candle 18 candle close, and then we do this calculation E1 minus E2, and this will be the difference. Okay, I have named it LCD. Then we take it and multiply it with the pip conversion factor, that is 10 to the power 4. So here it is, variable. This is going to be A1 into A2, and I will not really create the output value variable just yet. We will have to bring in the trade command block. After that, we will create this variable, as it needs to be of the integer data type, not the double data type. So we have to be careful here. Okay. And then we will multiply this output value, the stop loss level, with 2, and then that will be utilized as the take profit level. So we leave it blank as of now, and we will come back to this calculation expression blocks once we bring in the trade command block. First, let us utilize the if else blocks to define the conditions. So logical blocks are needed, and these are going to be 6, as our formation is going to be symmetrical. We had used 6 if blocks while defining the conditions for the execution of the buy trade. Yeah, I remembered rightly. Here we have to compare the closing values of 4 different hourly candles with the R1. So I will have to compare the closing values of the candle 18, candle 19, candle 20, and candle 21 respectively with the resistance value. And we bring in the first resistance R114, and that is going to be the common input for these 4 if blocks. So I will take all right. Now we turn our gaze to the historical candle data. Candle 18 candle close needs to be lower than the first resistance level. So we have to take candle 18 candle close, first input less than second input. Then we consider the penultimate hourly candle, which has a look back period of 2, and it should have closed higher. So candle 19 candle close. Here the condition is going to be that the first input is greater than second input, and then we compare the hourly candle which had closed 4 hours back. So for that we need candle 20 candle close level. Candle 20 candle close. And candle 21 candle close. Should have been higher too. Candle 21 is the candle which had closed 24 hours back. Here this is the first input greater than second input. All right. Now we have to pinpoint the exact entry point, and that will be when the price starts to drop below the last hourly candle close level. So again, I will need to take candle 18 candle close as the common input in both of these blocks. And then we compare these to the closing levels of candle 22nd and candle 23rd. These two are 10-second blocks. We will need candle 22nd candle close to have been lower than the candle 18 candle close, whereas candle 23rd candle close should have been higher. So I will take candle 23rd candle close first, and in this case we need to make sure that the first input is greater than second input, and after that we take candle 22nd candle close, and here this should be first input less than second input, and afterwards we bring in the trade command block. Open at market, buy, sell, first input less than second input. Now let me place these two big blocks on the lower side. And now we also have to define the input parameters for this trade command block. Default instrument remains as it is. Trade amount I will change to 0.1 million. Slippage, I think 2 pips is good enough. Okay, this we will define. We will have to create new variables here. I will name it SSB, and its value will be derived from the calculation which we had carried out here. Okay, and then we utilize this value and multiply it with TPF, which has the value of 2, to make sure that our risk reward ratio is 2. Okay, so again we do the same thing. We multiply A1 into A2, and this will be EBTPS. Okay, and its value will be derived from this calculation expression block. Now I will join it back to multiple action. Okay. So with this, we have these conditions defined for the execution of the sell trade. So I hope you have been able to understand the logical requirements first, and after that these design requirements as per the Visual JForex platform. Okay, so as you can see, we have the symmetrical formation in place to make sure that the iteration flow is going through till the very end. I will color code it and check it once, and yeah, it is doing fine. This our formation is complete here. Okay, so that's it folks from my side for today's session. If you have any query or any idea to share, you can write to me in the feedback section, and I hope you have enjoyed this formation, and hopefully you will try it out on your own, and if you are able to build it afterwards, I would suggest that you carry out the testing on the historical data using the JForex platform, and that will give you the idea whether the formation is profitable in the historical terms. In the last couple of years it has been profitable or not, you can check it out. Thank you all for joining in, and do subscribe to the channel. We are also available on the Facebook. You can reach out to us there too, and check out the Dukascopy analytics page. You will have multiple resources to analyze the situation in the market. See you next time. Till then, goodbye.